Hello traders, in this video we're going to go over my Spxl swing trade. That is a leveraged ETF that follows the S&P 500. If the S&P goes up 1%, this goes up 3%. If the S&P goes down 1%, this goes down 3%. So how do I manage that risk? I follow a very strict trading plan that I've written that is available on patreon.com. I have multiple trading plans now, a small cap trading plan, a mid cap trading plan, binary options, and a swing trading plan for S&P 500 ETFs, all available at the Battle Plans tier level. That's the highest tier level. It includes everything else, which means you're going to get access to all of my trading calculators that help you calculate a profit target instantly without error, and spreadsheets to track your trades, which is extremely important. So one thing that I want to say about my Patreon page, first of all, is thank you to all the patrons that have been around for the months that I've had this thing going. And it really encourages me to continue to make new tools and improve the tools that are already here and work on new plans and all that kind of stuff. What I have noticed, at least in one instance, is there are some people that will sign up, download everything, and then a few days later they split. Their pledge gets removed and they just walk away with all the tools. If you want to do that, that's absolutely fine. That's up to you. That's your prerogative. But you're really hurting yourself because you're going to get blocked. And then as I continue to improve these plans, like for example, my small cap plan is up, but it's still in its beta testing version. And yes, it is profitable so far, but I can guarantee you after I take 100 trades with it, I will have made some tweaks, some improvements to make it work better, make it even more profitable. That happened with the mid-cap plan. It wasn't quite profitable at the end, and then we figured out what was wrong with it, what needed to be changed. We updated the plan and uploaded the finalized plan. So if you get blocked, you're not going to get access to all the improvements that are made. So anyway, back to the trade, Spxl. So let's just do a quick little backstory on the S&P 500. So this huge downturn here was from the pandemic, back in 2020. This thing just flushed down. This, again, we're looking at Spxl, not the SPY, not the S&P 500, but the charts track the exact same patterns, basically. So they're all going to look the same. So what happened? So I wasn't trading back then. Otherwise, this would have been a great opportunity to get in, if not on the way down, which would have been quite a bit risky, believe it or not, because this thing just, it dumped and then it just continued to go further and further. I guarantee you that people that were trading it back here, when they saw this thing fall below the 50 MA and then maybe hit this level, they probably thought there's no way it's going to go any lower. It's not going to cross the 200 MA. And look what it did. It went extremely far down below that 200 MA. So trying to catch these things on the way down is pretty risky. But if you come up with some sort of plan that tells you when this thing has kind of regained upward momentum and you wait to enter after confirmation of that upward momentum, then you can jump in these things with very limited risk. So that's pretty much what happened back here after this thing crossed over the 50 MA. It was looking promising, but it's still below the 200 MA, and so is the 50 MA, and that is generally a sign that you could still be in a downtrend, you could still be weak. So this area here is still a bit risky to take an entry. And once the 50 MA crossed the 200 MA, you could see that there was a little bit of a choppiness and pullback. But then, and including here, after that, it just ran up really hard for a very long time. And it even stayed above even the 50 MA for many months at a time. And obviously has stayed up above the 200 MA ever since. And this is where we are today. I've been trading this thing since, I think back here, was it May? Yeah, it's on my spreadsheet, and I'll show you that in just a moment. I've been trading it since May with Webull, and then before that I was trading SPLG, which is another S&P 500, so the chart looks exactly the same. I was trading that one, I think, since back here in January. So all those videos are on the YouTube page if you want to go back and check those out. So anyway, I've been just kind of following these bounces off the 50 MA, taking entries when the price comes down below the 50 MA, as soon as the daily candle makes a new high. All of it's in the plan, and then I get out when the price comes back down and touches the 50 MA. That way I avoid wherever the next big crash is, that's the big thing right now, is everyone is trying to predict when the market is going to crash. If you just have a plan that tells you when to get in, when to get out, you don't have to worry about predicting when the market will crash. Back here, when the S&P was dipping to the 50 MA, they were saying it was going to crash then, it was going to crash here, it's going to crash here. But look, it just kept going up and up and up. So finally, we had a pretty decent pullback over here, which was reminiscent of what happened last year. And that's happened quite a few times where this thing in October pulls back and gets weak for a little while and then kind of rallies through the rest of the year. Does that mean that's going to happen every single year or going to happen again this year? We don't know. But you can base a plan off of something like that, but you must have an exit plan just in case it's wrong. And that's really the key. So my entry this time was for the break of this daily candle. I wanted to see the price get back above the 50 MA before I considered the S&P to be strong again. And once it did, I entered. So I got in on October 18th. Today is the 29th. So only 11 calendar days, probably 8 or 9 trading days. And right now we are still unprofitable as far as where the stop loss is, because I'm following the 50 MA, but our original stop loss was $117.15. And you can see we've come up quite a bit just since the October 18th, or October 19th was the entry, really. So 10 days. And yeah, we've come up a lot. We're almost to break even. I think in about 3 more trading days, maybe 4, we'll be at break even. And then anything after that will be just pure profit, no matter what the S&P does, as long as the price stays above the 50 MA. It can even come down quite a bit, but as long as it stays above the 50 MA, we're going to be good for a long time. And this trade could last a month or could last 2 months. We don't know. And we just follow the plan and see what happens. So let me show you the spreadsheet right now. Then you can see all the other trades that I was talking about. This is the first trade that I took on May 20th, second trade, third trade, and then the fourth trade actually should be marked. Sorry, yeah. So the third trade had 2 adds to it. So the third trade, I had 3 shares initially, and the price came down near the 50 MA but did not touch it, so I added. Then it did that one more time, I added again. So this is all one single trade, and the P&L from that trade is really the sum of these 3 numbers. So this trade is not really a losing trade, it's just a losing add, but this trade was a loser, and this was a trade that I took an entry below the 50 MA. It was part of the plan when I took the trade, but I'm updating the plan. And again, that's going to be available on the Patreon page very shortly. That will not allow me to take these entries because these are too risky, because I have to maintain my maximum stop loss until the price is above the 50 MA. It'll all be in the plan. Anyway, you could see that that was the only trade that I took the max loss on. So here, let's see, my ideal entry, my initial stop, my first day potential loss, and then my actual loss, they're the same. Where on all of the other trades, you're not going to really see it because they all ended up winning. My stop loss gets moved up as soon as the price closes above the 50 MA. So on the very first day, at the end of the day, my maximum risk is already lower than if I would have got stopped out on the day that I entered. So this is the trade that we're in right now, trade number 5. This was our entry, our position price here, our ideal entry, our initial stop, and our current stop is right here, 118.82. So our initial risk was almost $13, and right now it's only $4.60. And yes, I know we're talking about pretty small numbers here, but again, this is something that I am pretty new to, the swing trading, and I want to collect a lot of data first before I go in with larger size. I want to take at least 10 trades and prove this system profitable. 10 trades is really not enough. You really need 100 trades, but with swing trading, that would take so long. So after 10 trades, I'm going to start increasing the position size incrementally, not a lot, because again, 100 trades is what we really need. But we're going to keep increasing position size after the 10 trades until we find out, whether or not this thing is going to work long term. So anyway, hopefully this was helpful to you. Again, this plan and the spreadsheet is available on patreon.com/tradingarmor. So if you have any questions about that, about this plan, about this trade, just let me know in the comment section below and I'll get back to you. As always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.